Ready to make a real impact every day? Join the Active Day Home Care team and help clients maintain their independence in the comfort of their own homes. Make a difference in someone's life as you provide essential daily assistance and protect their health and happiness. Earn up to $20 an hour and enjoy additional perks like optional daily pay, 401k, paid time off, ongoing educational training, and more. Join a team that values care, compassion, and your professional growth. Visit activeday.com to apply.
It is Ryan Seacrest here. There was a recent social media trend which consisted of flying on a plane with no music, no movies, no entertainment. But a better trend would be going to ChumbaCasino.com. It's like having a mini social casino in your pocket. Chumba Casino has over 100 online casino-style games, all absolutely free. It's the most fun you can have online and on a plane. So grab your free welcome bonus now at ChumbaCasino.com. Sponsored by Chumba Casino.
No purchase necessary. VGW Group. Void where prohibited by law. 21 plus. Terms and conditions apply.
You're watching Worldview 2, built on the 35 years of Worldview books, documentaries, research, high-profile interviews, and the radio and television broadcasts of Brannon House.
Good morning. Welcome to the Eastman Financial Report. I'm Dan Eastman, your host, and today is Monday, June 16th, 2025. Beautiful day here in Milwaukee, Wisconsin, as we are actually up into the high 70s today, leaving winter behind long after the rest of America. But anyway, thank you for tuning in. As always, we appreciate your viewership here at the Eastman Financial Report. As you know, I broadcast live Monday through Friday from the great metropolis of Milwaukee, Wisconsin. And that's that's 11:30 Central Time, Monday through Friday. So anyway, thanks for tuning in. And also thank you for watching all of the programming we have here on Worldview Tube. As you know, we started this ministry a long time ago. It's been 30 plus years. Back in 2006, we began broadcasting information and commentary on the news from a Christian worldview and a Christian perspective. And that's what we do here at our ministry. We are very focused on taking and analyzing the news of the day from the Christian worldview and the Christian perspective and bringing that to the great marketplace of ideas where our viewpoints and our voice is heard. And that's a really important thing in a marketplace of ideas that's ever expanding. Given modern technology, the ability of people to start podcasts and all sorts of different ways of broadcasting their thoughts and opinions into this great international marketplace. And we need to be in there with our worldview as well. Now, you can help us in this ministry if you'd like. You can go to worldviewfoundation.com and make a donation. And of course, you can do that, sign up for a one-time donation, or you can sign up for repeat donations. And that, of course, helps us flatten our revenue curve so we can better match costs to revenues and stay in the black. And that's why we're able to bring our content to the great marketplace of ideas free of charge. We don't have a paywall or a subscription. If you're watching me live right now, you realize you didn't have to pay. You can just tune in and you can see this content free of charge. And that's our ministry and that's our mission. And that's why it's important that we continue to do this. And you can help us in that ministry by making a donation. There's another way you can help us in this ministry, and that is to do business with the companies you see advertising throughout the day on our network. It's an important thing. We don't sell a block of airtime where people run commercials and then that's how we generate revenue. We don't do that. We basically partner with companies we know and trust. And when you do business with them, you buy their goods or services, then a portion of those proceeds comes back to us in the form of a commission. And that also helps us stabilize our revenue and keep our content free. There's a third way that you can help us in this endeavor. And of course, that is by subscribing to our new product, which is called The Vault. If you go to worldviewtube.com/vault, it will take you to a subscription service. And here's the website right here on the bottom of the screen. And if you subscribe to that, you will have access to all of Brannon Howe's materials that he's collected for over 20 years. His books are in there, the video of his conferences and seminars, and all sorts of recorded information dealing with the thoughts and expressions of opinion of Christian worldview leaders throughout the years. All of that information is contained within the vault. Vault, and it's a wonderful resource, not only for on-demand reviewing and viewing and learning, but also, if you notice, the Eastman Financial Report reruns are on that in the Vault as well, and you can go back for interesting commentary in a prior timeline so that you can compare what I was saying then to what I'm saying today, and I'm sure you'll find it to be consistent. But the Vault is a very special thing, and if you subscribe to the Vault, you'll be getting a lot of value for those dollars and access to all of Brandon House information, and it's really worth your time. And that also, of course, helps us stabilize revenues for the network. So 3 ways to help. You can make a direct donation, you can do business with vendors who are advertising, or you can subscribe to the Vault, or you can do all three. That all helps keep Worldview Tube and Worldview Radio alive and robust and in that great marketplace of ideas. Well, let's talk about the news today. And of course, there have been some big headlines over the weekend. One of the things that a lot of financial and economic people have been watching is the situation between Israel and Iran. And of course, this is a battle that's been brewing for decades. So you could theoretically argue that since the fall of the Shah of Iran back in 1979, that the Iranian situation has been a very destabilizing force coming out of the Middle East and is instrumental in fomenting global terrorism and trouble. And it's a very interesting cultural clash between an Islamic society like Iran, which basically adheres to very strict religious principles, and the Western world, which is a lot more liberal, small L liberal, with respect to social behaviors and economic behavior and basically freedom of thought and expression and things of that nature. So there's been a real setup for decades of the clash between the West and Iran ever since Iran stopped being a secular country and moved back towards an Islamic republic. And of course, that's what we're seeing playing out right now with respect to Israel and its aggression or its attacks on Iran to effectively neutralize that country so that you effectively can stop the proliferation of nuclear weapons and an empowerment of a nuclear-powered, or at least a nuclear-armed Iran. And that's what we're watching.
Riley Herbst from 2311 Racing here. And you know what grinds my gears? Waiting for coffee. But instead of counting frappes and lattes, I fire up Chumba Casino. No apps, no fuss, just fun social casino games to pass the time. By the time my coffee's ready,
order for Riley.
I've already taken a few victory laps. Next time you're stuck waiting, make it entertaining. Play for free at ChumbaCasino.com. Let's Chumba.
Sponsored by Chumba Casino. No purchase necessary. VGW Group. Void where prohibited by law. 21 plus. Terms and conditions apply.
Drivers who switch and save with Progressive could save hundreds. With that kind of money, you could go big time on a fancy water bottle with ultra titanium alloy metal. You're not sure why you need all that. I mean, it just holds water. But you're getting it anyway. Because if you're hiking near an active volcano and you accidentally drop the bottle into molten lava, your water will still be icy cold. Switch to Progressive and you could save big time. For water bottles. Progressive Casualty Insurance Company and affiliates, not available in all states. Potential savings will vary.
Effectively over the weekend, Israel is making certain strategic attacks to try and neutralize that platform. The Iranians, of course, are not happy about that. They're feeling their sovereignty is being violated, and that situation has been escalating rather rapidly. And of course, if you watch the news, you realize that the United States, always and forever in the middle of these things, has been mobilizing not only resources, but also financial resources to deal with the situation as this effectively progresses. Now, there's news this morning that things are calming down a little bit, that the Israelis have basically captured the sky over Iran, and they're heading back to the peace table, and that's probably a great place for them to be, because you really don't want to see an escalation into a global conflagration, especially in the Middle East, where so much of the world's oil is produced. There are different factions within the Middle East oil producers, and certainly Iran being one of the larger countries, and of course a very old country. You merely need to crack open your Bible to realize how old Iranian society is, Persian society. This is a good thing to be able to bring common sense and at least cool things down and get back to the bargaining table. So we're watching that news. It's fluid as the situation seems to be stabilizing. Stock market's up and it's, it's happy days are here again, at least on Wall Street. But let's analyze this a little bit deeper. And I think this is an important time to, again, bring up this issue of the U.S. problem with its debt. We have a $37 trillion national debt. 37 trillion is a lot of money. Now, 37, I talked about this last week. 37 is not a big number, it's a small number. But when you add the trillion part, it becomes an almost unfathomable amount of debt that the United States government is carrying. And the debt service on that debt is well over $1 trillion a year. So when you look at our base of 165 million taxpayers, and those 165 million Americans dutifully pay their taxes, the rest of the Americans are either too young or they're exempt, whatever. But the tax-paying base is paying into the federal treasury. And of course, I've got some numbers on that. The tax revenues generated, and this is on average, and it's also rounded, is let's say $5 trillion a year. Okay, at least this year is $5 trillion in taxes taken from the people of the United States of America out of their wallets, sent to Washington to be spent on whatever Washington wants to spend it on, okay? They take $5 trillion, and that is about 27% of the total tax base that is allocated for interest on the national debt. So if you think about it, $5 trillion, well, maybe a little over $1 trillion of that $5 trillion is going to pay interest on the debt, the $37 trillion in debt. And the rest of it gets spent, okay? And the problem is when you look at the federal spend, it's $7.2 trillion. So if you take in $5 trillion and you spend $7.2 trillion, that leaves $2.2 trillion gap or deficit. And that's what the annual spending deficit is. And if not managed or at least punted, that $2 trillion ends up on top of the $37 trillion, which will take us to $39 trillion in debt. Now, I talk about this every day on my show because this is the real fundamental problem in the U.S. economy, is the fact that the federal government is bankrupt. They're not officially bankrupt. The federal government can't go bankrupt under our Bankruptcy Act. There's no provision where the federal government can go bankrupt. It's a sovereign state, and it's effectively underwater. So let's maybe just, instead of using the B word, bankruptcy, let's talk about being underwater, chronically underwater. $2 trillion operating deficit underwater, which is adding to the $37 trillion of debt that's been accumulated by operating underwater for decades. And that will, of course, raise the debt from $37 to $39 trillion. And that means there will be more money coming out of that taxpayer base, that $5 trillion out of the tax base, to go to pay interest on the bigger debt, and less money available for social programs and the military and this and that. Okay, so that's the situation that we're in right now with respect to our federal spend. So why is this relevant? Why is it relevant today? Because when you look at Israel and Iran duking it out over in the Middle East, and you realize that the United States government has very strong vested interests in the Middle East, not only in Israel as a partner in democracy, but also in the oil supply and the shipping lanes, the United States government has to mobilize the military to go and protect U.S. interests abroad. This is basically one of the things the federal government was charged with doing when we created the federal government under our American Constitution. The idea is that we would have a strong military who would not only protect our borders, right, but they will go off into the world and they will protect our interests. And of course, that's what this is all about. So the United States government, of course, and the military is mobilizing. And you're seeing news stories of lots of airplanes heading over to the Middle East with supplies and this and that. And I'm not going to talk about what's in them because I guess loose lips sink ships. So the point is the United States government is mobilized the military, and they are pushing a lot of stuff over to the Middle East to support Israel in this effort against Iran. Well, all of that costs money, okay? And when you're $37 trillion in debt and you're already running a $2 trillion annual operating deficit by doing all sorts of domestic spending and NGO money, all that stuff, where does the money come from to do a mobilization in an emergent time like today, when the federal government realizes that we need to be in the Middle East and have a very strong presence to show the flag, protect our interests, support our allies, and bring this thing to either, hopefully the negotiating table, or perhaps if it heats up, then we've got to be ready so that when it heats up, we're there giving the heat. And that's the point. It costs money to do that. So the question that needs to be asked of our illustrious leadership out in Washington is, if you've racked up $37 trillion in debt, and it takes over 25% of your tax revenues every year to pay the interest on that, leaving only 75% of the revenues, tax revenues, available for everything else, which is including a ramp up in military. And you're already operating at a $2 trillion deficit. You're in the hole $2 trillion when this thing emerges. Where do you get the money from to fight this battle? And of course, the answer is you sell bonds, and you sell bonds, and you sell bonds. And this is an interesting time for the United States, because we are in this sort of strange interregnum, even though our regent has been inaugurated and sworn into office. We don't have a king, we have a president. But the point is, our president has been sworn into office, but we have this lag in fiscal budgeting in Washington that is creating massive pressure on the federal budget today, because we still, in theory, have the debt cap. The idea is you're not supposed to be able to go out and raise, sell a bunch of bonds and raise money. Well, where do you get the money? Where do you get the money to ramp up a major military operation in what is probably one of the more escalated military events in the last 20 years? I mean, Israel is a very complex society, and of course, they have a very strong interest in protecting their sovereignty as well as their national interests. And we see them incursions into Lebanon and Syria, Gaza, and they're hither and yon, and they're doing what they do to protect themselves. But when you talk about an escalation to go after Iran, which is a very large country with a lot of people and a rather significant economic base, that is a requirement of, you need substantial money to do that. And my point is that the federal government, because of its spendthrift ways and this racking up of this $37+ trillion in debt and running an annual deficit, it wouldn't be so bad if you had this debt, but you were at least in break even and you go out with some money to fight this war. They're not there. So the question we ask from an economic and financial perspective is, where are they getting the money to do this? Especially if there's a debt ceiling cap. Is there? Isn't there? Well, in extraordinary times, and this is if you go back to the Janet Yellen era, which was only 6 months ago in the Biden administration, when the cap was being reached, the debt cap was being reached, Secretary Yellen explained rather eloquently that they go to extraordinary measures. And of course, this is what the federal government does, because the federal government has bills coming due every day. And right, the Treasury writes the checks, you got to pay your vendors, all this stuff. And where do you get the cash? And if the Treasury, which was sitting on, I think it was about $600 billion in reserves, as that's working down toward $200 billion in reserves, you're getting pretty close to the bottom of the cookie jar. And the question becomes, where do you get the extra money? What are these extraordinary measures? And to a great extent, and I'm simplifying here, is that the Federal Retirees Pension Fund tends to be the cookie jar or the rubber band of last resort that gets tapped, which puts a lot of stress and pressure, of course, on federal retirees and people working in the government that would like to retire someday, watching this process, because the federal government needs to be in balance with respect to the law, which says you can borrow so many dollars and no more, and we're up against that. That's the debt ceiling. And you've got this national emergency. Well, when push comes to shove, if we were being attacked or even in this serious situation, the Treasury has the ability to issue bonds, and theoretically, I'm not saying this is happening, but what's the plan C? Okay, plan A doesn't work. Plan A is illegal. Plan B isn't working. What's plan C? Well, there's always the good old Federal Reserve, right? Because they can buy bonds and put them on their balance sheet. And the question becomes, are those bonds issued or not? And that's been a debate in the Federal Reserve for a very long time. And that goes back to the Fed's open market activities and this thing, or this process that we have since 2007, 2008 quantified as quantitative easing and quantitative tightening. So when the Federal Reserve steps into the bond market to buy bonds that nobody else will buy to keep the interest rates in a band, and they put those bonds on the balance sheet and they pump more money into the system, Milton Friedman and his buddies will tell you that more money chasing the same number of goods is inflationary. So when you see this type of headline of, attacks and mobilization, and we're shipping all this stuff over there when we're already broke and we're already running a deficit and you're bumping up against the debt ceiling, the question is, where's the money coming from? And secondly, how does that impact me as an American citizen? What do I have to do to protect my assets and wealth in light of this fiscal problem? If the federal government were running the government properly, we would not have a deficit, an annual deficit, and our debt would be much smaller and manageable. It would basically support bridges and roads like the states do. But we're not there. We have a profligate system. And you can see that in the One Big Beautiful Bill debate. I mean, this is a real problem, and nobody in Washington has any concept of limits on the ability of wealth that can be extracted from the American public to fund every dream on the planet. And that's where we are today. Well, let's take a break. I'll be right back. We'll talk about some more news. Thank you.
Step into the world of power, loyalty, and luck.
I'm going to make him an offer he can't refuse.
With family, cannolis, and spins mean everything.
Now, you want to get mixed up in the family business.
Introducing The Godfather at ChumbaCasino.com. Test your luck in the shadowy world of The Godfather slot.
Someday, I will call upon you to do a service for me.
Play The Godfather now at ChumbaCasino.com.
Welcome to the family.
No purchase necessary. VGW Group. Void where prohibited by law. 21 plus. Terms and conditions apply.
Drivers who switch and save with Progressive could save hundreds. With that kind of money, you could go big time on a fancy water bottle with ultra titanium alloy metal. You're not sure why you need all that. I mean, it just holds water. But you're getting it anyway, because if you're hiking near an active volcano and you accidentally drop the bottle into molten lava, your water will still be icy cold. Switch to Progressive and you could save big time. For water bottles. Progressive Casualty Insurance Company and affiliates, not available in all states. Potential savings will vary.
Hello, I'm Brandon House. I want to thank you for all your support at wvwfoundation.com that helps make possible pushing out 24/7 content for free. Without your support, we'd have to put it all behind a paywall. But thanks to you and your support through our foundation, we're able to push it out for free as a broadcast service and broadcast ministry of WVW Foundation. Please consider going there and setting up an automatic monthly contribution, or go there and make an occasional contribution. If you prefer to support us through the mail, you'll find our mailing address there at wvwfoundation.com. You can also call and make your contribution over the phone by calling 901-825-0652. That's 901-825-0652. Again, all these details are available at wvwfoundation.com. Thank you for your support as we try to help people around the world understand the times through the lens of a Christian worldview.
Okay, welcome back. Thanks for your patience. So I was talking about this problem of the federal government basically having spent us broke and not having the revenues and the tax base large enough to support not only the annual spend, but also this increase in the debt that's continuing year after year after year. And one of the problems with that in the debt market is that as interest rates are pushed up, because any debtor, you can see this in your own credit scores. If you have a lot of debt, you have credit card debt, mortgage, car payment, all this stuff, your credit score is lower. And that means the interest you pay on a new loan will be higher because you have a higher risk of default. That's the whole purpose of these credit scores. And I'm not a big fan of these things because I'm not so sure that independent organizations that come up with a number aren't damaging people by publishing scores. But I'll leave that discussion. That's more of a legal discussion. But the point is, there are credit rating agencies, and they look at you and they say, you got big mortgage, you got big car payment, you got all these credit cards. We're going to give you a lower score. So therefore, if somebody wants to lend you new money, it's at a higher interest rate because you're a bigger risk. Same thing with the federal government. Now, this is on a macro scale, but as the federal government's debt continues to go towards infinity and beyond, I guess, as you could cleverly say, the problem is that people who lend to the federal government want a higher interest rate because common sense and even the three bond rating agencies will tell you that we're not a AAA AAA rated credit any longer because there's too much debt and you're running deficits too long. So the point is the interest rates go up because you lend money to the federal government, you want a little more interest because there may be a default. Now, we've never had a default except 3 times, according to some skeptics. But the point is there is always risk, and risk is quantified in return, rate of return, which encapsulates not only return on equity or return on capital, but the risk premium as well. And that risk premium is going up. So what it tells you is that the Federal Reserve, in order to keep the federal interest rates within a band, and this has got nothing to do with what they're doing tomorrow and the next day at the Federal Open Market Committee, whether they're going to raise or lower rates. That's all theater. And I've explained this many, many times on my show. That's theater. They're not changing it. Even if they cut the rates, doesn't mean anything. Where the real action is in the federal open market activities. And the more pressure on bonds because of a perceived risk that the United States is just spending itself way beyond its revenue capacities means that the Federal Reserve, through its open market activities, has to step in and buy bonds, take them, put them on the balance sheet, pump more money in, and by lowering the supply with it to demand, you can effectively keep the interest rates in a bandwidth. And that's the monetary policy that the Federal Reserve does. It's not this kabuki starting tomorrow through Wednesday, and that's illusion. What you really want to be watching is open market activities. Watch the balance sheet size of the Federal Reserve. It's been bouncing between $6 and $8 trillion in bonds that shouldn't be on there at all. But they are, and they do that because they're trying to stabilize the interest rates. So what does that mean for you as an investor? Well, if there's a pressure on interest rates, there's more risk. Now we're sending all this military stuff overseas. There's more risk, then investors will say, I want a little higher premium on that 10-year bond, okay? So that means if they want a bigger interest rate, that means that they're going to pay less for the bond to get to an effective interest rate that's higher. Remember, it's an algebraic relationship between the $1,000 bond issued at 5%, but then as the bond value goes up and down based upon supply and demand in the marketplace, the effective interest rate is moving. And the nominal rate is 5%. When the bond comes due, here's your money back, and you got 5% per year. That part is fixed. But what is not fixed is the market value, mark to market. The market value of the bonds are going up and down based upon perception of risk. And as risk increases, the value of the bonds are going down, so the effective rate is going up, which means if I want to step in and buy a $1,000 bond, but I'm thinking, well, it's more risk, and when I get paid back, I'll offer $950 for that bond. Well, it sells it to me. Well, now I paid $950 for a bond paying 5% that was issued at $1,000 5%. So I'm getting more than 5%. That's how that algebra works in the bond market. And that's why it is really a problem for people who own a lot of federal debt. Because if interest rates are being pushed up because effectively the federal government's broke, or at least insolvent, or at least running in the hole or underwater, then all the bonds on their portfolio are starting to decline in value as interest rates go up. And the only mechanism, that would be the perfect market mechanism to regulate the government so that they would stop selling bonds because you're just going to blow the bond market to smithereens. So the only mechanism that can step in and keep those interest rates in a bandwidth is the Federal Reserve through its open market activities. And that's what they do. And that's why if you watch in times of more stress, the bond holdings on the Federal Reserve's balance sheet get bigger. You can see it as you go to their website, they'll tell you. It's not a conspiracy theory. They'll tell you exactly what they're doing. There is no conspiracy. If you know what they're doing and you understand the process and you watch it, then you're going to have a better idea. So what do? I've got my 401k in a federal bond fund. Well, if the market value of the bonds are declining, the value of your fund is declining. Now, of course, funds are buying and selling bonds all day long, and professional bond managers know how to ride the curve and ride the wave. But it's an issue. But if you buy federal bonds directly, so you buy a 10-year bond and you're 5 years into it and interest rates go up, well, if you sold the bond before its maturity date, you get less than you paid for it. There'd be a loss, capital loss on the bond. That's why you have to be very careful when you look at the dynamics. And the political solution would be to have a federal government that taxes its tax base and then spends accordingly, and is not delusioned or misillusioned into spending money it doesn't have because it can borrow it and do things beyond its tax base. And that's the problem with a country of 330 million people. Now, that was a big deal when India and China were, economic backwaters. Everybody's making $600 a year. But that's not the case today in a global economy. India is a very, very up and coming place. China certainly is becoming a very, very up and coming economy as well. And you're dealing with two nations that have a tax base that's 4 times larger than ours, 5 times larger, depending how you do the math. Think about that. And that's why when we at the United States have to start thinking about how much can we afford to spend rather than continuing to spend like the global superpower with no hope of ever paying it back. Because what ultimately happens is that rots the integrity of the currency, and you're going to end up with a very inflationary economy at a point in time where at least current statistics show that less than half of Americans own homes. Well, what do you do in an inflationary economy when you don't have tangible assets that go up, when the rising tide floats all ships and you don't have a ship, or maybe your ship is tethered to the bottom of the harbor? You're underwater. And that's a real problem with the current policy in Washington. It's just simply detached from this idea that you only have so much tax revenue capacity at our current tax rates. Now, I suppose Congress could raise, double the income tax, take it back to 90% like it was after World War II. But politically, that's going to be a real problem in the next election. So what do? Well, they just keep basically issuing and funding. And with the debt ceiling in place, this is becoming a problematic thing. And that's what the big beautiful bill is all about. They want to raise the debt ceiling by $4 to $5 trillion to give more borrowing room, with the idea to fix the problem, move forward, and then start to calm things down. Well, that remains to be seen. And I think that's why some of the problems we're seeing with that bill passing in Congress, and something will pass. I mean, obviously, you're not going to go to the point where the federal government runs out of money. It never does. We talk about that every time that story comes up. Nobody's betting on that pony, because it's just simply will continue to go along. But the question is, if we continue to do the same thing for 30 more years, what does that do to the value of your savings and your investments and your things if you don't own real estate or you don't own tangible assets that increase in value? And that's where you find society is very much damaged through that phenomenon of inflation. Keep in mind, we're not starting at zero. We're starting at 37 trillion in debt. Right now, we're running a $2 trillion deficit. We're not starting at zero. We should be effectively trying to figure out, step one, how do you balance the budget? And that's what these tariffs are all about. There's been some interesting movement on the tariffs. Europe, the European Union, of course, is looking at, okay, we'll do a 10%. And that's what I was talking about last week. It's really an entrance fee. If you want to sell stuff into the United States, great, but there's a 10% fee that goes into the U.S. Treasury. And if you want to sell, the United States wants to sell stuff into Europe, great. Okay, we'll pay you 10% and marks up 10%, and then we can sell into Europe. And the same thing with China. And what's really coming together is the European Union's at 10% base. China's now at a 10% base with a 20% kicker for the fentanyl problem. If the fentanyl goes away, the 20% goes away. So it's a real incentive for the Chinese to stop that market, because, it's interesting. If you look at the opium wars between the British and the Chinese, very much the same as what we're looking at in the fentanyl wars with the U.S. and the Chinese, effectively bringing a lot of damaging goods in and taking our money away. And that was the whole purpose of the British and the Chinese opium wars. It's the same formula. History may not repeat itself, but it very, very definitely rhymes. And that's why that's important. So we're looking at the impact of the tariffs as generating effectively, a 10% sales tax to do business. And that will offset to some degree the deficit. We hope it offsets it all. Anyway, I'm out of time for today. I will be talking about this throughout the week. Have a great week, great afternoon ahead of you, and I'll talk to you tomorrow. Take care. Bye.
You're watching Worldview 2, built on the 35 years of Worldview books, documentaries, research, high-profile interviews, and the radio and television broadcasts of Brannon House.
But with Brannon, it's always cutting edge stuff happening in the world, and it's not just from the political angle, because you can get that on other platforms, but it's always from the biblical angle. So you're dealing with a guy that loves Jesus, you're dealing with a guy that's very intelligent, you're dealing with a guy that is cutting edge conservatism, and you're dealing with a guy that wants to be biblical all at the same time. And so for that reason alone, I hope many, many people will not just lift up his ministry in prayer, but will also financially get behind it, because he, from the angle I'm trying to describe, he really is the only game in town. And we desperately need it in these last days. Can I get an amen to that?
Hello, it is Ryan, and I was on a flight the other day playing one of my favorite social spin slot games on ChumbaCasino.com. I looked over at the person sitting next to me, and you know what they were doing? They were also playing Chumba Casino. Everybody's loving having fun with it. Chumba Casino is home to hundreds of casino-style games that you can play for free anytime, anywhere. So sign up now at ChumbaCasino.com to claim your free welcome bonus. That's ChumbaCasino.com and live the Chumba life.
Sponsored by Chumba Casino.
No purchase necessary. VGW Group. Void where prohibited by law. 21 plus. Terms and conditions apply.